up 3.1%, year over year.
A lot of folks are looking for these signs, and if they're going to be data dependent, here's the question: what should they do? There are some very influential voices out right now telling them, especially today, don't hike rates. Let's bring in Rebecca Walser of Walser Wealth Management and John Petrides of Point View Wealth Management. Guys, good morning.
Morning.
Good morning.
I am talking about the ever-powerful editorial board at the Wall Street Journal. Yesterday, now today, op-eds coming out left and right from the Journal saying that they need to pay attention to what's happening in the economy, and they're not. And Rebecca, here's what the editorial board said. The right answer, it's the time for Fed pause is the title of it, but here's what they say. The right answer: ignore the politics inside and outside the Fed. Follow the signals that suggest a prudent pause in raising rates at this week's meeting. And they are very clear right now that they're saying they need to stop. What do you say?
Well, I think Chairman Powell is in a little bit of a tough spot because, just a couple of weeks ago, he was making it very clear that a rate hike was coming and that unless things had significantly changed for a dramatic period of time, I mean, a substantial change in a sea change, really, that they were going to continue with that. So if he changes course now tomorrow, people are going to think it's quasi-political. And, the market might also think if it's economical that there are really bad forecasters for the coming period. So that could be bad as well. If he doesn't change, then you're going to have a bad reaction as well because nobody wants the hike. So you have him in a really tough position. And then with President Trump tweeting and that it's always the Fed's fault, that also makes it very difficult, makes it political as well.
Oh, yes, the tweet. Let's show our viewers the latest tweet from the Fed. Here's one of the better choices from President Trump about Jay Powell. It is incredible that with a very strong dollar and virtually no inflation, the outside world blowing up around us, Paris burning, China way down, the Fed is even considering yet another interest rate hike take the victory. John, that's President Trump going against the Fed right now. What do you say?
Well, as if Chairman Powell needs another institution telling him how to do his job. The Wall Street Journal comes out with its policy and the president piles on. I do think the Fed raises rates tomorrow. I do think they take a more dovish tone. Maybe 2 rate hikes in 2019. They're going to watch to see what happens with the trade tariffs and see if the underlying U.S. economy and global economy continues to flatline or deteriorate. And they'll use that optionality to maybe raise the rates in June and or in December. But it gives them that gap to mine the data and see what's going on. Again, wage growth is up maybe 50 basis points from where we were 12 months ago. And we have 2 months now of above 3.1%. So that has always been the one data point that the Fed has kept its close eye on.
Yeah, it's interesting, Rebecca, too, because they're going to look at it, inflation. They're going to, which again, as I pointed out at the top of the segment, you've got oil. Usually that's considering the coal mine, but oil, farm products, all of those kind of inflationary pressures seem to be down. They've got their mandate is also employment. That is strong, Rebecca. How does the Fed react to the data, do you think, next year?
I agree. I think the data is mixed. We do have oil down and we have strong fundamentals. We've had positive GDP. We have great unemployment numbers, and those are, indicative of the economy going robustly and very strongly. But the other point, we have to step back and look at this at a high level, macroeconomic level, because we do have, you guys were talking about in the last segment, the quantitative easing pressure. If we do have another recession and the Fed keeps rates where they are, we don't have a lot of negotiating room for them to help us. So that is a problem. They're going to keep that in their mind as well.
Yeah. John, real quick, the issue of China, anything he says about trade or the media, the statement says about trade is going to be scrutinized word for word. What do you expect, if anything?
Yeah, I would expect a very high level tone. We continue to monitor the situation. Let's see what happens with this truce. Clearly, maybe he makes a comments on how Chinese economy has suffered from trade. The Chinese stock market is down over 20%. But he's going to take a very hands-off approach. The president is already on his back about raising interest rates. The last thing that Powell is going to do is pick a fight over trade tariffs. So he's got to take a step back and be from a bird's eye view on that situation.
Which means he is listening to what the president is, reading what the president's tweeting. Rebecca, John, guys, thank you very much. Appreciate it.
Thanks.
Thank you.